Okay, getting set for the Swiggy listing. You can see the live visuals coming from the exchange, the promoters, and of course, NSE's Mr. Ashish Chauhan as well. The indicative price is settled in around 420, so that is definitely indicating a little bit of a premium, much unlike what the market was anticipating. We will, of course, be cutting live to that ceremony in just a short while from now. But let me welcome on board Pankaj Mital, the CEO at Samvardhana Motherson, and Kunal Malani, the CFO as well. Pankaj, let me come to you first. Soft global conditions, I guess, have led to muted organic growth for you at about 4 to 5%. But as demand stands, are you expecting a similar growth for entire fiscal, or would you say you'd manage to do better?
We have seen in the past also that the growth comes back faster than our imagination. So we remain prepared for that at all times. Having said that, whenever there is uncertainty, there is also a lot of pain in the market. And we, being a solutions provider to our customers, always look at those opportunities. If you see, we have had a tremendous growth, which was backed by acquisitions, and have had very good financial growth as well. We have also deleveraged ourselves in this period to be ready to take on the opportunities which come our way in the future.
Okay. Pankaj, this question is again perhaps link up from what you just indicated. Incrementally Q1 to Q2, have things been better? Can you call out a bottom, and can you say that second half will be better than the first half?
Well, none of us are gazing at the crystal ball, so we don't predict as to how the market would behave. We remain prepared to take on the things as they come. We are nimble-footed and very good reaction to whatever comes our way.
If I just might add, if you look at our current growth as well, we have outperformed the industry by 4 to 5%. So what is uncertain is clearly the market outlook remains uncertain. But I think given our strong order book at nearly $88 billion, it is giving a fair amount of visibility to the revenue stream that we anticipate. So subject to volumes, we don't know where it will be, but from a market perspective, we will always be outgrowing the market. Our product mix is favorable. There's enough content growth in all our product lines, and we remain a premium-oriented player.
Morning, wanted to get in your take on margins because they have slipped this quarter. So what is the outlook when it comes to recovery? Will that largely be led by the mix and the premiumization efforts?
Look, it's a seasonally weak quarter, right? We had highlighted this earlier as well. In quarter two, you have the shutdowns in Europe, which is a reasonably decent sized part of our business, and that creates a seasonally weak quarter for us. Now, in spite of that environment, if you look at the growth, even on a normalized basis, our profitability has grown by 66% odd. EBITDA has grown by 20% plus. So it's been a fairly decent performance in the backdrop of how the industry was. The industry degrew in the same time frame. I don't think we were, or any of us was anticipating this degree of deacceleration so quickly. But look, I think we are prepared. As Pankaj mentioned, we're looking forward to more opportunities. We get the best of opportunities at the worst of times. As Pankaj mentioned, there is obviously more pain if things become more uncertain and volatile. And in that environment, a strong player like ours should be able to support the customers, not only in their organic plans, because they also need to reconfigure their plans, but also inorganically, because there should be enough number of suppliers, which solution providers should be able to capture some of those. So our leverage, having brought it down to 1x, provides us enough headroom to go after many of these opportunities.
Right. Pankaj, how is it that your recent acquisitions have fared, and are you looking at making more such?
We are always open, and we are not deciding by ourselves. So we are very much customer focused. All our acquisitions, all this growth is coming at the behest of customers. So we remain very open. We listen to the customers and take those actions accordingly. You have seen that we are not only growing in the automotive side, but also beyond automotive. So we take care of those customers as well, and growing quite well. As you would have seen that the non-automotive side of Motherson is also healthy and growing.
Okay. So Pankaj, you spoke about non-auto business. Help us with an update on progress with the consumer electronics and the aerospace forays.
Well, the non-automotive side, the diversification is gaining traction and is on a very strong growth path. And consumer electronics plant has come on stream and has delivered its first batch of customer deliveries. We will be ramping up the serial production going forward. So it's a significant milestone for us. Aerospace division also with multiple facilities situated near shore and best cost countries across Europe, North Africa, and Southeast Asia is also very well entrenched into the aerospace ecosystem. Also, as you would have seen, we announced a new joint venture with our existing partner, Hamakureksan, to provide core logistics, 3PL services, EXIM, and sustainable packaging solutions to various customers in Japan as well. Total non-auto side is also having a good revenue run rate of approximately 3,000 crores per annum. So this is a good growth path on which we are with the trust of our customers, backed by them.
Right, and Pankaj, on consumer electronics, can you share details with respect to the launch timeline, what the geographies that you're looking at, what is the market share, any targets?
It won't be possible for us to disclose more than this at this moment.
All right, thank you so much for joining in. And
if you like this video, then like, share and subscribe to ET Now.